In this video, let's talk about value-added taxes. So, what are value-added taxes, or what is the concept behind VAT or VAT? So, VAT is a form of sales tax. So, it's similar to the sales tax in other countries, and it's a tax on consumption levied on the sale, barter, exchange, or lease of goods or properties and services here in the country, and on importation of goods into the Philippines. So basically, anything that will involve the consumption of goods or services in the country plus importation. So it's a form of an indirect tax which may be shifted or passed on to the buyer, transferee, or lessee of goods, properties, or services. Now, please do take note that this is also one of the unique characteristics of value-added tax. Unlike your percentage tax, which we discussed previously, value-added tax can be shifted to the end user, i.e., the taxpayer. So it's called an indirect tax. So unlike your percentage tax, which is imposed on the one selling, this one you could collect the value-added tax from the customer. That's the reason why when you shop here in the Philippines, you will notice that the VAT is separately shown in the receipt. It's because you are, as the end user of the product or consumer of the product or service, will have to pay for it. So it's the business shifting that obligation to pay that VAT from or to you as the end user. I hope that was clear. Now, so we've talked about the registration threshold a while ago. So if you reached more than 3 million already, you have to register as a VAT registered tax business. You just have to go to the local BIR office and have your registration updated. The employees at BIR will help you do that. So if you just reached 3 million, do you have to register as VAT already? Not necessarily, because the law states that you have to reach more than 3 million pesos in order to be registered as VAT. Now, the tax rate for VAT is 12% on gross sales or receipt, with the benefit of tax credit if duly registered. So what does this mean? Under the VAT system, you have the so-called output VAT, which can be shifted to your customers if you're the taxpayer, and that's 12%. But you could also claim a deduction from your VAT payments. Remember, as a business, you also have to pay your suppliers, and your suppliers will shift the VAT on your purchases to you. So they will collect the VAT on your purchases. So you could claim a tax credit from those payments to your VAT payments to your suppliers, and use that as a tax credit or a deduction from your from the VAT that you collected from your customer. So the VAT that you collected from your customer is called output VAT, but the VAT that you paid your supplier is called input VAT. And you compute the VAT or the VAT that you have to pay to the BIR as the difference between output VAT and input VAT. Okay, so I hope that gives you an idea of the system. But if you're having difficulties, don't worry. We have an exercise later on whereby you will see the difference between the output VAT and the input VAT. And again, the form that you will be using here is 2550M. If you remember, for percentage tax, we're using 2551Q. And remember, under percentage tax, it was 2551Q. So Q means quarterly. In this case, VAT is paid on a monthly basis. That's the reason why you have to make use of Form 2550M. So the due date is similar to percentage tax, only that in this case, it's 20 days after the close of the month instead of quarter for percentage tax. I hope that is clear. So for example, if you'll be paying your taxes of your VAT for November, so you will make use of Form 2550M and you have to pay on or before December 20. All right.